Good afternoon, everybody. Welcome, nice to see everyone. In case you haven't met me before, my name is Mc Currie. I'm Head of Technical Marketing and Distribution. And from my side, a very warm welcome to everybody today. Today is going to be a Discovery Life annual review. We're going to touch on, I think, a couple of very key insights from my side. So we're going to do a bit of a review of Discovery Life as a business over the last year, kind of taking our financial results as a snapshot as to the performance of the business. I'm also going to be highlighting some of the key opportunities that are really kind of playing out over the next 3 months through the various special offers that we've currently introduced and currently are rolling out with. And finally, I'm also going to be launching a couple of new initiatives today, really focusing on offering a lower cost entry point to integration, which I think is very exciting, and touching base on the new process for the bank integrator. So from my side, kind of a really short, sharp, interesting presentation, covering from my side a number of key insights into the Discovery Life business. And once again, thanking you all for your support over the course of the last financial year. Just for a quick recap, the Springboks are winning the rugby quite easily, just so everyone who's worried. It is currently 40-0, and I do appreciate everybody coming to watch me instead of watching the rugby today. Okay. So just in terms of the presentation today, guys, so like I said, I want to briefly touch base on just a Discovery Life update, briefly go through some of the financial results which would have been presented by Adrian over the last couple of weeks. I'm then going to go into our continued investment into shared value assets. I want to touch base on the opportunities that are really available for you and your clients, and ending on the various marketing support initiatives. Like I said, I really enjoy these type of presentations because for me it's touching on what I believe are the most important things for you sitting as advisors in the room. Okay. In terms of starting off as an update, I think it's always important to go to what our ambition is, and our latest ambition is really changing the health and wellness of the various Vitality members across the world. So the target is making 10 million people 20% more physically active by 2023. So really kind of a global ambition, really trying to change the way that the world engages with Vitality. Because I think importantly, with the kind of rollout of Vitality on a global level, we've really now formed a global Vitality network. So when you look at how the model stacks up today, what you're really seeing is that it's touching across the world through our joint insured lives of all the various partners. It's 300 million potential lives that you can change with Vitality. It's quite a staggering number. As the model sits today, it's 7 million Vitality members, more than 300,000 new Vitality members joining every single month. And really, it's quite a staggering amount of physical activity and health and wellness that we're currently tracking. But I think importantly as well, really gives us the ability to change the way that the world engages with health and wellness. So the latest real initiative has been this idea of Vitality One, a global platform where various partners can simply plug into the model. So building this kind of fintech platform that partners, insurers can simply plug into and reward their clients. So it's R500 million that we've invested to date in Vitality One, with the latest company joining that being Saludza, who's actually an insurance company in Ecuador, so South America. So the 6th continent that now has the ability for clients to integrate their life insurance policies with Vitality. If I look at how the group performed over the last financial year, once again, very strong new business growth given the economic climate in which we're operating in, and that is once again thanks to your support as financial advisors. So we saw across the group growth in new business of 13%, but I think importantly as well, the period marked a huge investment in new businesses. So it's an investment in new companies as well as an investment in South Africa, which I think is important. And in spite of that huge investment into new businesses, operating profit was still only down 3%. So core businesses were operating very strongly. However, the additional profitability generated was put into new business initiatives that we were rolling out. Okay. From a Discovery Life perspective, if I focus in on our results a little bit, it was once again a period where new business grew. So overall, new business was up 7% for the year. And really, if you look across channels, new business was up across all the channels that we operate in, which I think importantly shows the competitivity and the relevance of the product, regardless of the client that we're talking about. Now, like I said, we're operating in a world where there are currently economic headwinds, and you really do kind of see a bit of a tale of two cities when it comes to the various insurance companies in the market. So what's quite interesting is if you look at the growth of the various companies, so the growth of all the companies in the market, with Discovery included and with Discovery stripped out. Okay, so just bear in mind the numbers are slightly different here because this is going Q1 2019 and this is financial years. But effectively, if you look at Q1 2019 versus Q1 2018, Discovery Life grew 8.8% over that year. The rest of the industry was actually down 4.7%, and on average, the insurance industry was slightly negative at 0.9% down. So I think importantly as well, what this speaks to is really from our side, the ability to grow through innovation, the ability to grow by giving a better value proposition to members and to yourselves as financial advisors. Okay. So if I kind of track that new business quarter by quarter over time, I think it's been quite interesting. So this is new business market share, and this is the entire retail affluent market going back into quarter 2 2016. So effectively going back the last 3 years. What's been quite interesting is that quarter on quarter, Discovery Life's new business market share has actually increased. So we've gone from about 27% market share in 2016 to where it sits today at 32.6% market share. So of every 3 Rand coming into the South African retail affluent market, 1 Rand comes to Discovery Life. Okay. When I talk retail affluent, those are your Discoveries, Momentums, Old Mutual, Sanlums, PPSs, FMIs, etc. It's that market that I'm really talking about. Okay. In terms of competitors, what you've really seen is kind of a bit of a trend downwards because Discovery has been capturing quite a lot of market share. And when as it sits today, effectively our market share, the amount of business we write is 2.5 times bigger than the average of our competitors. Now, I think importantly, when I talk about market share, the key to me about market share is that market share just reflects the feelings of advisors. It shows us where advisors believe the best value sits and where they believe their clients are getting the best protection. So I think importantly, when I put market share on a screen, it's from a perspective that it tells us that we know that we're doing the right things for you and for your clients. I think that's important. That's why we track things like market share. Okay. If I look last year, what was quite interesting, you guys would have heard about this, was there was a very high unnatural and very high death claims coming through during the course of last year. So from a Discovery Life perspective, this was a driver as to why profitability in the year was actually down on the previous year. It was because of high unnatural claims. So if you look at the first half of 2019, we actually had an actual claims experience for death claims being 123% of that expected. Now, what really was coming through, there was a large amount of unnatural death claims, and I think what's quite scary is if you have a look at last year, what suicide claims were actually double what they were in 2011. So suicide claims are things that vary on an annual basis. They are quite volatile, but just for interest's sake, it was 200 million Rand that we paid out for suicide last year, which is a staggering number. It's incredibly scary, and that's why when you look at kind of the initiatives being rolled up by Vitality, there is such a big focus on mental well-being. Like I said, there's actually a 200 million Rand prize if you can crack how to effectively make members healthier and more mentally, I would say, mentally aware. Okay. If you look at the second half of June, that corrected. So like I said, this was a spike in death claims. In the second half of the year, it corrected. And over the entire financial year, it was slightly worse. But like I said, it was really driven by the first half of the financial year where you had this very high number of unnatural claims. But once again, just for perspective, effectively that translates to 20 more large unnatural claims than what you expect. So this kind of volatility happens, and we have focused on changing our reinsurance agreements to kind of correct any volatility like this going forward in time. Okay. In terms of the model, because like I said, when we speak about claims, the obvious point we always talk about is how Vitality reduces claims. So I think it may sound a little bit weird that I'm talking about high claims, but we often talk about Vitality reducing claims. I think what's important to note is, like I spoke about, this was a large amount of unnatural death claims coming through. And what you once again see with Vitality, which is quite an interesting way to represent it, is that by cause of death, you have Vitality reducing natural claims substantially. So you see as Vitality status goes up, the probability of natural claims goes down. But accidental claims are much more volatile in nature. So you do see a slight reduction for members who engage in Vitality for unnatural claims. That's generally the second order effect. So of someone being on a diamond Vitality status, generally they actually see being a better driver, interestingly enough. You probably have seen that in your own client bases where your members on diamond Vitality are also more likely your better drivers. Okay. Like I said earlier, however, obviously from our side, there's huge investment in how we reduce unnatural claims. It's why we have Discovery Insure and Vitality Drive, and it's why for the suicide and mental and behavioral claims, there's a big focus on Vitality about how to improve the mental well-being of clients. So this is something we acknowledge. It is something we are working on. Okay. In terms of the business, and I think operationally, I think it's always very kind of like interesting to kind of juxtapose two things. Yes, we do operate a model the rest of the industry doesn't. a model where we look at health claims, vitality status, Discovery card spend, and Discovery bank spend, Discovery insure data, and we take all that information and collate it into an integrated journey for a client, a journey where you get value for changing your behavior. Now, from a life insurance company, this creates a huge amount of data and complexity for us to deal with in the background. I think it's quite staggering, but we're generating about 50,000 quotes a month. But at the same time, we're having to take nearly R500 million of spend into account, nearly about 350 million rand of health claims, and about 5 billion vitality points, and use all that information when we do servicing quotes, policy anniversaries, payback calculations, claims calculations. So you have this huge operational complexity coming in, but really kind of translating into a seamless process for clients. I think it's sometimes quite nice just to kind of put those numbers out there. So when you have a look at it in terms of how it actually translates to policy anniversaries, we're billing about 900 million rand every single month. And as I said, when we're doing that billing, we're pulling information across the Discovery group to calculate health claims, to calculate paybacks. Okay. We're doing about 30,000 policies anniversaries a month. We actually complete 96% of anniversaries on the day, and then we're completing the other 99, the remaining bit of it, within the first month. Now, the question sometimes gets asked is, why are some policy anniversaries delayed? The reason for that is, when we do a policy anniversary, we send a client a notification before the anniversary occurs. We send it 60 days prior to anniversary. But what happens if servicing is done in the month before anniversary, and what happens if a client's vitality status changes? Because what we actually do is we apply the best vitality status from what you had when we sent the letter to what happens when anniversary goes through. So when those two things happen, the anniversary process is delayed, but really at the end of the day, it results in a better outcome for a client because you're using a better vitality status for their health integrated adjustments or for their payback. So that's the primary reason why you do sometimes see anniversaries being delayed. And like I said, sometimes advisors do ask us what percentage is that happening to, but the reality is it's a very small percentage. Okay. At the same time, however, like I spoke about, we're billing clients for anniversaries, but we're also generating paybacks and claim payments. And I think once again, it's quite staggering when you see the numbers. So paybacks is about 1.1 billion rand a year that we pay to clients in paybacks, and at the same time, we're processing about 4.2 billion rand in claims. We're also writing new business at the highest amounts in the market, and once again, really using information across the group to do that efficiently. Okay. I think the one way that we've really tried to focus on that is proactively and automatically underwriting clients through the various information that we have across the Discovery group. Okay. The way that we call that is auto underwriting, and what auto underwriting does is it uses the information across the group and it tries to make sure that we can activate the policy without having to call any additional underwriting requirements. So our target number for this is 1 in 4 cases being automatically underwritten without calling for additional health tests. As it sits today, because we started rolling this out during the course of the year, we currently can fulfill about 1/4 of requirements for Discovery Health Medical Scheme members. So it's not quite 1 in 4 new business applications, it's 1 in 4 DHMS members are having either full or partially their medical requirements fulfilled by the automatic underwriting process, which uses information from pathology results and wellness tests to actually, like I said, match the result to the life without having to unnecessarily call for additional underwriting. Okay, so it's something we're working on, but I do believe we're making big strides in this regard. In terms of, like I said, really kind of reinvesting in shared value, I think importantly, like as I kind of mentioned in the Discovery Life overview, our focus is on how do we kind of differentiate our model, how do we use it to drive good value for our members, because what we've really seen is that innovation that's allowed us to grow when you really do see other insurers struggling. So it's really been this kind of constant innovation and constant drive to change the value proposition for clients that's allowed us to grow in this environment. Okay. If I have a look at the recent innovations in shared value, you'll kind of see that they're all broad, and they all are really covering a range of kind of breakthrough innovations. I think importantly, when we talk about innovations, we're not simply changing definitions in a life plan guide. We're really trying to change the products and services that our clients have available to them. Luckily for all of you today, I'm not going to go through all of them, but I think once again, importantly, it really kind of shows our kind of commitment to delivering new products, new services to your members, because at the end of the day, like I always say, the reality is clients' needs aren't static. If you're offering your clients a product that was developed 5 or 10 years ago, that product is out of date. The needs that our members have, the type of technology that's available, the type of medical treatments are changing at a rapid basis, and you need to make sure the product remains relevant. Okay. In terms of the innovations from the Discovery Life business, I think we kind of sometimes see them as a bit kind of like, we kind of see them a bit of business as usual. Discovery Life does deliver a lot of innovative solutions, and I think you've come to expect that of us, which is correct. But I think importantly, what we've really found is at a global scale, these innovations are seen as incredibly innovative, and I kind of happily quite say this, I think we are the most innovative life insurance company in the world. Okay. The way we do that and the way we try and stack this up for ourselves is we actually enter into global innovation awards. We try to make sure our products are the most competitive. So if I'm talking about the Global Education Protector, that won the world's most innovative life insurance product in 2018. The Managed Care Integrator came second in the same award ceremony done by Accenture and EFMA. From a local side, our lifetime severe illness was rated the best oncology benefit by ICON, and really the Dollar Life Plan is completely unique in the market by giving clients an offshore protection policy. The Bank Integrator has recently been nominated in the finalist in another EFMA award. This is actually this time in the banking category. So this award is currently still going on. We're actually going to be presenting in Paris next week in order to actually go through the results of and the actual product itself. I thought it would be quite a nice opportunity to give you a sneak preview of what the presentation that we're going to be giving looks like. Because once again, I think it really kind of introduces and shows just how innovative these products are seen as a global scale. And like I said, this is the video we're going to be showing, so please enjoy.
Using a range of internal and external data sources, Discovery has developed a real-time financial fingerprint for each client based on 5 key behaviors. And through a proprietary algorithm, this information is simplified to produce a scientifically relevant vitality money status based on their probability of default.
So like I said, really exciting, and hopefully kind of add to that Global Innovation Awards that we've done. Like I said, this is taking place over the next couple of weeks. So if you really kind of see how all these innovations stack up, it really kind of today translates into a product suite that we're trying to design to cover kind of a client's full range of needs, going all the way from graduates in the Smart Life Plan to clients seeking offshore protection through the Dollar Life Plan. So really trying to make sure the product is comprehensive and is covering the full spectrum of clients' needs. Now, I think importantly, our focus is always on best benefits. Our number one focus is giving clients the best protection available. Our focus isn't trying to offer clients a low-cost option. I think what's very interesting about our model is that because we have access to the Vitality chassis, what this enables us to do is offer clients a comprehensive value proposition at a very cost-effective premium. Okay, for interest's sake, I've put up kind of the relative premiums you normally see on average for the policies. I think kind of a couple that really kind of stand out to me are the Business Life Plan, driven by the fact that you get a 50% discount on your capital disability premium for the first 3 years, and interestingly, a Dollar Life Plan. I'm sure it may raise the question, how do we see a Dollar Life Plan being 19% cheaper than the market in Rand terms? The reason being is that the Dollar Life Plan can be estate duty-free depending on how you set up the beneficiaries. That effectively translates to 25% saving because you don't need to purchase the additional cover. But I will touch base on that a little bit later because I think it's a very interesting part of the product. Okay. So when we look at integration, we see it delivering incredible value in terms of premium savings, but I think importantly, obviously, integration isn't just about savings, it's about all the other value that both clients, society, and financial advisors get from the model itself. Okay. So if I have a look at some of those key outcomes, what's been very fascinating is in the last month, we paid our 5 billionth Rand in paybacks. So to date, it's 5 billion Rand that has been paid to members in the payback benefits. I think interestingly, I joined Discovery in 2010, At that point in time, we'd only ever paid 144 million rand in paybacks. At the moment, we pay more than R1 billion a year to the payback benefit. The largest payback received by a member to date is 1.6 million rand, which is quite an amazing number. Okay. In terms of cash conversion, like I said, cash conversion is starting to pay out. So obviously it had a 10-year period. The members had to be in before payments commenced. We've started paying them out. It's 44 million rand to date under the cash conversion benefit. The highest payment is 7 million rand. I love the story of the guy who got 7 million rand. He is, and just because I always think it kind of removes all the excuses of Vitality. The guy who got 7 million rand, it was a 65-year-old, obviously, because that's when it pays out, who owns a printing business in Kimberley. Okay, now why I think that's exciting is a lot of the time guys say to me, Vitality is only for certain people. If a 65-year-old in Kimberley is getting 7 million rand or being on a diamond Vitality status, that tells me that Vitality is for everybody. Okay, it's about 2.2 billion rand that you expect to pay out under the cash conversion over the next 5 years, which is quite an exciting number. Okay, what that really means when you add up paybacks and cash conversions is that very soon we're going to be a company that pays more to members for being healthy than we do for members being sick, which is quite an amazing kind of change in mindset as to what life insurance is. Generally, life insurance is there to pay you when something terrible happens. I think what we're really changing the perception is that life insurance can pay you when good things happen, when you're engaging in health and wellness, when you're managing your effectively financial health. If I look last year and I look at all the amounts that we paid out, about 25% of what we paid out was for clients making healthy choices. So paybacks, cash conversions, and like I said, we're expecting that number to grow in the future. So really exciting, changing what insurance means to members. Okay. In terms of kind of the outcomes of shared value for the insurance company, from our side, we track this very closely every year because obviously from our perspective, we need to make sure the model works. And even last year, when you had a high number of unnatural deaths coming through, you still saw about a 44% reduction in mortality rates by Vitality status. And importantly as well, you saw about a 60% reduction in lapses. So you have healthy clients retaining their policies for longer, which generates huge value to us as an insurance company, which we can pass back to members. That's where paybacks, that's where cash conversions come from. Okay. I think another important element of integration that I think advisors sometimes get concerned about is when clients have more products with one company, is there a risk of having too many eggs in one basket? Now, it's very fascinating as we've tracked this, is that actually it turns out from our research that the more products a client has, the lower the lapse rate ends up being. Okay, the rationale for this is obviously that if a client is seeing value in an insurance product, they purchase more products from that same company and they keep the policies for longer. Like I said, I'm sure you have had experience in your own rights when your most loyal clients are the most loyal clients across all the products that Discovery offers. It's very unlikely it's a client who likes one product only. Okay. In terms of advisors and the value that we see shared value generating for advisors, I think it's quite interesting, but when we look at our integrated versus non-integrated premiums, our integrated premiums are about double our non-integrated premiums. Now, the reason why this is interesting is that you would expect that because integration gives you a premium discount, that you would expect clients to actually have lower premiums if they're integrated. What we're seeing in reality is that clients consolidate their portfolios, they purchase additional protection, because the sad reality is that clients are underinsured. The ability for them to get value, the ability for them to get paybacks actually means that they use that saving, they use that value to purchase additional cover and fully protect themselves. Okay. We see that coming through very strongly in terms of the benefit take-up of these policies. So the average non-integrated policy generally only has life cover on it. So it has life cover only, whereas the average integrated policy, so a client on health or vitality integrator, generally has 4 or more benefits on their policy. So life cover, captive, SIB, ICB. So I think really kind of showing and demonstrating how the model encourages clients to do holistic financial planning. Okay. The kind of lifeblood of shared value and our continual reinvestment in shared value is engagement. Okay, so since 2010, we've seen engagement levels increasing 5-fold and generating a significant change in life expectancy for our members. I think it's quite staggering, but the South African insured population has a life expectancy of 67. Okay, when I show this to advisors, most of the time they don't believe me, but for the clients that you see, South African insured population average lifespan is 67. When we've been working with our various reinsurance companies and tracking the mortality rates through, we're finding that Gold and Diamond members are increasing their life expectancy to 87. So really driving significant changes in their health and really leading to significant life expectancies. But the real kind of key of the model has to be that it has to maintain its clinical relevance. It has to make sure that it continues to deliver these outcomes for our members. Okay. You would have seen this coming through at the recent Vitality launch. So obviously there were a huge range of additional benefits launched at the recent Discovery Day. But I think importantly as well, we've seen once again the commitment of Vitality to make sure that you target the correct outcomes, to make sure that we're targeting the correct behavior change for our members. The kind of last element of Vitality that was really loyalty based was Diamond Vitality status. You're on Diamond, you're on Gold for 3 years, you move to a Diamond Vitality status. But the reality is when we tracked and we looked at the various clinical metrics of these members, you don't really see an improvement based on duration. It actually has to be the change in behavior and the change in, like I said, the change in behavior targeting the correct outcomes in order to get the actual clinical behavior change. So there was really a focus about how do we make sure Diamond remains a clinically relevant and really a kind of, like I said, a halo status that attracts members to change their health. Okay. There are obviously also points made to the various, like I said, the various categories, making sure that we're obviously tracking all the various screenings that you want to make sure members are able to get access to and opening up additional points earning abilities for members. But I think importantly from my side and when I talk to advisors, it's about the kind of change to the point statuses and the change to Diamond that I think is particularly relevant. Okay, so I want to kind of touch on that very briefly. When you look at it, obviously, as you guys would have known, there were changes made to the various thresholds to encourage engagement. So if you're looking across the various thresholds, there was actually a reduction in points to encourage all members to engage. And the real big change was a change in how you get to Diamond. Okay, so instead of being 3 years on Gold to get to Diamond, the change was that if you get to 50,000 points in a particular year, you can automatically go to Diamond. I think importantly, that effectively means that any client can get to Diamond in a year, which I think is an incredibly powerful outcome. And I think importantly as well, it removes kind of that penal loss if a member goes from Diamond and drops down. One of the biggest concerns guys has if a member goes off Diamond, it takes them another 3 years to get back. I think importantly, this change means that actually a member can automatically get back to Diamond within a 1 year period. Okay. What's been very interesting is us tracking what we see this doing to our distribution of our members. Okay, so this is the Discovery Life distribution based on what we expect to happen with this change. Now, interestingly, we expect the number of members on Bronze to be increasing significantly because of the change to how the threshold works and the increased engagement we expect to see coming through. And actually, Gold and Diamond is also projected to increase slightly because, like I said, everybody now has the ability to get to Diamond in 1 year. So from my side, there were really 4 key outcomes of the change. Like I said earlier, effectively the reduced thresholds mean that more members can engage in the product to getting to Bronze and better. Everybody has the ability to reach Diamond in 1 year, which I believe is a very powerful outcome. And it's easier for members who drop off Diamond in order to get back to Diamond the next year, which once again I think is a very powerful outcome. Okay. The Vitality team's obviously going to be working very closely with you. There are a range of things they are looking to roll out. The first is really analytics. So they're going to have available the ability for you to actually track the impact of this Vitality change to each of the clients in your portfolio. They're going to really be rolling out the ways to make sure you understand what the impact's going to be and understanding how clients can still retain their Gold and Diamond Vitality statuses. And obviously the ability to run all the various wellness days that you can as well to make sure members continue to engage in the program. Okay. The next thing that we've really introduced within the shared value model and our investment in it is making sure that there's an easier way for members to integrate, a way to encourage further engagement. So before I do that, I just thought it was worthwhile just to briefly recap the current model as it sits today. Effectively, we have 3 types of integration. Active integrator, which you can get with Vitality Active, giving you discounts effectively with Vitality rating of 21% and a 10% payback, all the way up to the health integrator, which is up to 32% discounts and 50% paybacks. The moral being, the more information we have available, the richer the rewards that we can provide. Okay. Going into 2020 with the launch of the health tracker, we're actually going to make it available that members on the Vitality Health Tracker are going to be able to active integrate their policies. Okay. If you're at the launch, you'll see in the health tracker, it's an element of the app that's available to anybody. And what this effectively means that at 0 cost, a client can access an integrated Discovery Life plan. Okay, so for R0, a client can integrate their Discovery Life policy, get a 21% premium discount, and get 10% of their premiums back every year, which I think is a very, very powerful outcome. Okay, this is going to be available Q1 2020 with the launch of the health tracker. But like I said, I think really a way to introduce a stepping stone to all members that they can come into the Discovery world without costing them a cent, and they can upgrade to the various Vitality packages as they generate value from it. Okay, I think a very, very positive change. Okay. So just very briefly how the Active Integrator works, just for everybody. So like I said earlier, the Active Integrator, it's a 15% discount with Vitality rating goes to 21%. You can normally get it through Vitality Active, but from 2020, you're going to be able to get it from the health tracker. So for no cost, you can integrate your Discovery Life policy, get a 15% premium discount, and then depending on how you engage in the health tracker, you can get a further up to 10% of those premiums back every 5 years. And then I'm hoping, like I said, that as members engage, they then want to upgrade to Vitality Integrator or Health Integrator. So I think a really kind of positive stepping stone. Okay. The final kind of like two sections I just want to touch on today, guys, are the powerful opportunities that we have available. So if you're at the Discovery Day, we launched a range of special offers. I really think it's a nice opportunity to touch base on them because effectively we're 5 weeks into the period, and I really want to touch base on some of the insights that we've noticed so far because I really want to make sure your clients are getting the maximum value of those opportunities. And I also want to touch base on the bank integrator and what the latest kind of status is with Discovery Bank and how your members can access that integrator. Okay. For everyone who was at the launch, we showed a video, I think a very nice one, about how the products and the various opportunities work. And I'd like to show it again just to highlight the value proposition. Okay, so like I said, I think 3 very exciting opportunities we're currently rolling out until the 15th of December. The maximum payback offer, giving clients ability to get a guaranteed payback of up to 50%. The buy-up double payback offer with the ability to double your paybacks if you take the buy-up income continuation fund or buy-up cash conversion. And the dollar life plan opportunity. The ability to get a dollar life plan and only pay premiums on R10.90 to the dollar for the first 3 years, even though you're fully protected at today's exchange rate, which effectively means that like R15.14 to the dollar, which we are today, it's giving a client about a 35% premium discount. That's what that translates to. Okay, so I really believe 3 very powerful opportunities. I'm going to use this opportunity today to briefly touch on how the opportunities are currently playing out, and from my side, just to highlight opportunities that I think some advisors may be missing out on. Okay. The first one is a maximum payback offer. Now, the maximum payback offer works quite simply. If a client is taking out high ancillary take-up, and I say high ancillary, but I don't think it's that onerous, effectively that means 2 benefits of more than 50% or 1 benefit of more than 50% and the income continuation of 20,000 Rand. Then their payback matrix goes from the normal payback matrix of up to 50% for a comprehensive health plan client to a guaranteed payback matrix of 50% for the first 3 years. So effectively, if a client's on high ancillaries, for the first 3 years, they qualify for the maximum payback that their payback grid receives. Okay, we've run other special offers in the past that have guaranteed a member a diamond status, but still would use their health claims. In this scenario, the member is always getting the top right-hand cell. They are getting the best payback possible for the first 3 years. Okay, I really believe a powerful opportunity. Okay. If I look over the first 5 weeks, what we've seen panning out so far, it's 55% of clients are qualifying for this limited offer, so qualifying to receive the guaranteed paybacks, which translates to about 150 million rand that we're going to be giving clients in guaranteed paybacks. What's been quite fascinating is the behavior change that we've seen. So for the advisors taking the most advantage of this offer, so the top 20% of advisors using this offer, what we found is that they're writing 100% of their new business at the high ancillary level. So they've changed the way that they quote in order to make sure clients maximize the value proposition of this offer. Okay, just to illustrate what difference this can make of changing the behavior, I'm going to show an example of an actual client. Okay, so this is a client that we've seen coming through during the special offer period. He was 45 years old. He took capital disability of 60% and severe illness of 45%. Okay, so this isn't a test, but if you remember my previous slide, you needed 2 benefits of more than 50% to qualify for high ancillaries in the special offer. So this client doesn't currently qualify for the offer. They would get the normal payback matrix on their policy. Okay, everyone with me? Okay, cool. All he has to do, however, is increase his severe illness to 50%. He's 5% short currently. If he was at a 50% severe illness benefit, which in this particular scenario would be costing him, it's about 50 Rand, he would actually qualify for the guaranteed payback offer, which means that instead of getting the normal payback matrix, he gets a guaranteed 50% payback for the first 3 years. Okay, so assuming kind of average engagement and vitality, what this effectively means that for 5% more severe illness, the client would receive about 12,000 Rand more value over the first 3 years of that policy. Okay. I think from my side, I think it's just kind of a realization to kind of point out that I really believe it's important. If guys are just short of those limits, I think it's important just to know that and to know what value proposition there would be through the special offer period. I think, like I said, a client like this isn't alone. There are about 2,500 clients who didn't qualify for the special offer during the offer during the special offer period so far, and about 70% of these clients had one benefit already of more than 50%. So they're pretty much in the exact same scenario as the client that I showed you in this picture. Okay, I think importantly, guys, and I think this is an important one to note, we are going to be checking the criteria at the end of the special offer period, so the end of December. So what that means is, if you may have, sometimes when I show these things, guys think, geez, well, I just signed a client and this was a client just like this. You have until December if they want to qualify for the offer. So you can go back and service a new business quote written in the special offer period up to the correct level, and they will qualify for the offer. Okay, so if there are any other clients like this, guys, I just urge you to have a look at it. Okay. The second offer we're rolling out is the double payback special offer. It allows clients to double the payback that they receive over the first 3 years of the policy, and they get the additional amount back at 65. Okay, so it works very simply. If you take up the buy-up cash conversion or the buy-up income continuation fund, you double your payback over the first 3 years. The additional payback gets set aside and pays out to you at 65. And importantly, you can qualify for both the maximum payback offer, so the guaranteed payback, as well as the double payback. So that means a member can guarantee 100% of their first 3 years worth of premiums back. Okay. If I look to date, 25% of clients with this special offer also qualify for the maximum payback special offer. Okay, so they are getting 100% of their premiums back. And I think an important point about the maximum payback offer, the guaranteed one that I spoke about first, is that there is no requirement in terms of them being on a certain vitality rating status. That is all A1 clients qualify for the offer, which I think is very important. Okay. This offer, however, is available to both new and existing business. So the reason why this is 25% and not higher is because there are also servicing clients coming through and adding buy-up cash conversion or the buy-up income continuation fund to qualify for double paybacks for the next 3 years. There are about 100,000 opportunities that we've sent out to you as advisors through the various bulk quotes. We would have received them as servicing opportunities where we gave you the various policy and quote numbers of policies that you can of quotes you can activate where we've already done the servicing on our side. All that would be for you to decide is this a correct benefit for my client, and do I think we should be activating it? Okay, so keep a lookout for those bulk quotes that have been sent out. We will be resending out updated ones because obviously they're only valid for 21 days, but there's a massive opportunity there within existing books. Okay. Once again, I've done the same kind of analysis. This is another new business client during the special offer period. they qualified for the max payback special offer, so they are getting a guaranteed 50% of their premiums back. They have the income continuation benefit, but they don't have the buy-up income continuation benefit, and the advisor is thinking as to whether they should add the buy-up income continuation benefit. Okay, if they add the buy-up income continuation benefit, their premium changes by about 192 Rand, but what that means is that they now qualify for 100% payback for the first 3 years. Okay. As I spoke about earlier, you get your normal guaranteed payback paid out to you at year 5. The additional amount through the double payback gets given back to you at 65. And in this client's scenario, that would give them about 113,000 Rand paid at 65 on top of the buy-up income continuation fund payments that they would end up receiving. So they take out the buy-up income continuation fund. On a blue status, they get about 3.2 million Rand paid out to them at 65, which is a rate of return of 14%. So the first 10 years of retirement that get paid out to them. If they're on a diamond status, it's about 7.3 million Rand that they'll get over the first 10 years for about a 19% rate of return. So I think the key is buy-up income continuation fund is a very powerful benefit. And through the offer, the client's getting another 113,000 Rand because they double their payback for the first 3 years. Okay, so once again, clients will be checking this at the end of December. So for both existing and new clients, this is a massive opportunity in my view in order to supplement retirement savings. Okay. The third offer that we're rolling out and currently have available is the dollar life plan. Okay, the 10 Rand 90 to the dollar. This to me is my favorite offer. I think it's an incredibly powerful one. It's completely unique in the market. No one else offers a true offshore policy. Okay, I think I always have to kind of re-emphasize this. But it's a genuine offshore life insurance policy. It's held in Guernsey. It pays out anywhere in the world, and you're paying a premium in dollars. Okay. During the special offer period, what we're offering is ability to pay 10 Rand 90 to the dollar for premiums for the first 3 years. Okay. So how it works, and we've kind of gone through this in the past, is for 10 Rand, you pay 10 Rand 90 to the dollar, provided that the exchange rate is less than 17 Rand to the dollar. So in today's exchange rate, instead of paying 15.15 a dollar, you will pay 10.90 for premiums. That's about a 30% saving. That guarantee applies all the way up to 17 Rand to the dollar. If the exchange rate goes above 17 Rand, you still get a 20% discount. So at 17 Rand to the dollar, 20% discount is about 13 Rand, so still a very good value proposition. If the exchange rate goes above 17 and back below 17, you will still go back to 10.90, so it's not like you lose the guarantee. And if the exchange rate ever goes below 10.90, you will pay the lower exchange rate. There's no way for a client to be worse off in this offer period. And I think importantly, I always have to say this, you're paying premiums at 10.90, but you've got cover at 15 Rand 15. So today's exchange rate. So a client would get the full payment if they want to repatriate it in South Africa, or obviously it is a dollar amount that can pay out anywhere in the world. And I think importantly from my side, when you think about how, kind of really when you're looking at it, people do move, people do change their outlooks. And I think even for people wanting to stay within South Africa, the important point is a portion of all of our liabilities is tied to Rand dollar exchange rate. I think what this allows is for a client to set up a kind of a very valuable amount for their estate that is linked to Rand dollar and is actually kind of independent. I think we always talk about diversifying investments. This to me is about diversifying life insurance. Okay, because for a lot of people, the life insurance policy is their most important asset. Okay, so to date, what have we seen? We've seen about a 400% increase in dollar life plan sales during the special offer period. So as you would expect, we see big take up during the period. But to me, this actually tells the wrong number. To me, this actually tells that most people aren't using this day to day. Because my take is that a dollar life plan should be part of everybody's financial plan. It's available from $50 a month. And in reality, everybody should have a portion of their cover in dollars. Okay, that's my honest take on the situation. Okay, it's about 35 million Rand that we're going to be saving current people with the offer over the last 5 weeks. The average premium of clients with the offer is $315, and average sum assured is $470,000. So those are very high sums assured, very high average premiums, and I actually think tell the story that advisors aren't using this for every client. And like I said, my real view of dollar life plan is that at the end of the day, when you talk to a client about a dollar life plan, it makes a lot of sense. An offshore policy, dollar denominated, protecting them against fluctuations in the Rand dollar exchange rate, with the ability to pay out globally if they have children overseas, and the ability for it to be estate duty free. That to me is an amazing, unique value proposition. I find the biggest hurdle with the dollar life plan is actually, with all due respect, normally the advisor. And that to me often comes across from actually being comfortable with the product. And I think importantly, you can always get in contact with me or my team. We're more than happy to go through the details. And Harry Joffe and his legal advisors are obviously also experts in how the product works. My key is that it's something I would not be missing out on. Okay. So just how does it stack up when I talk about what estate savings means and what the exchange rate saving actually translates to? Okay. I think importantly, when you look at the dollar life plan, it does cost slightly more than a local policy. The additional premium in rand terms for a dollar policy is about 3.8%. The reason for that is because of all the additional operational work that goes on our side to get the foreign exchange, firstly to get the forex, to get the clearance, to send it to Guernsey, to administer the policy offshore. Okay. First of all, I think actually the 3.8% is actually quite an amazingly low number. If I'm not sure, but some advisors have actually done and spoken to me quite a bit about this. If you try to take out a life insurance policy from an offshore company and you live in South Africa, the normal territorial loading is about 30 to 40%. So you pay 30 or 40% more to get dollar protection. Normally, within our policy, it's about 3.8%. Okay. The key, however, is that it can be estate duty free. Okay, all that happens within the application is that the life assured can never nominate their estate as a beneficiary. Provided you can't nominate your estate, it is not going to fall within the state duty net, which is obviously important for someone who's not going to be leaving, for example, someone who doesn't have a spouse or someone who only leaves a portion of their money to their children. This makes a lot of sense. Okay. The second point is obviously that we also have a special offer currently going, which means that instead of paying premiums at 15 Rand 15 to the dollar, today's exchange rate, you pay premiums at 10 Rand 90. So what that actually means that relative to a local policy, you're able to take 25% less cover because it's state duty free, which saves you about 22%. And you're also getting a premium discount of about 30%. And when you translate that, it means that it's about 44% cheaper than local cover. Okay, it's quite an amazing outcome. So that means that regardless of whether you believe in offshore cover or not, if you want the cheapest life insurance value proposition in the South African market, it's actually the dollar life plan, which is quite an amazing outcome. Okay, yeah, most people would not have thought I'd get to that conclusion in dollar. Okay, another important point just to note is, if clients qualify for the offer, they always qualify for it. So if a client isn't sure how much cover they're going to need abroad, if they take a minimum $50 policy today, they can do whatever servicing they want to over the course of the policy, and the total premium will qualify for the special offer. So they can add $50 today, qualify for the special offer. Next year, if they want to take more money within the dollar life plan, they can increase that premium by $1,000, and this full $1,050 will qualify for the 10 Rand 90 premium. Okay. So from my side, like I said, I believe it's a huge opportunity. It's a very unique product, a very unique offering, and I think meeting a very real client need. And I think, like I said, something that is very unique in the South African space. Okay. The final thing I just want to really touch base on in terms of opportunities is the various limited underwriting opportunities that we have available. Okay, so we've sent these various lists as part of your advisor dashboards with the franchises, or your franchise would have shared with you. But effectively, it's a range of opportunities which we've tried to look at, which have very limited or no underwriting. So about 160,000 opportunities that we identified. And I think the real thing from our side is we really try and make sure we use our data to deliver services to you. Opportunities, value propositions, things that are completely unique, and I really urge you to use that. Okay, like I said, we do spend a lot of time trying to make sure we make it as easy as possible to do business with us. Okay. The final new thing I want to kind of touch base on today, guys, besides launching the health tracker and that new integration, is just retouching base on the bank integrator. So bank integrator is obviously kind of fully going live now that bank is rolling out fully, and I think it's important just to touch base. So previously, bank integrator was only really available to existing Discovery card members. Okay. I think importantly, in November the 8th Smart Advice release, it's going to then be expanded to all people with both Discovery cards, and the ability for you to actually write Discovery bank accounts and send the leads process through to Discovery Bank. So effectively, to bank integrate any client that you see, which I think is a very powerful one. Okay, so just a brief recap on the bank integrator. The bank integrator gives a client a discount of up to 15%, and just bear in mind, all the premium analysis that I've done in this presentation has not included the bank integrator. So if a client bank integrates, you can take another 15% off anything that I've shown previously in the presentation. Okay, you get a 15% premium reduction, and if you're on a classic or purple life plan, you're qualifying for a vitality fund as well. Effectively, that means that you're actually, from a rand perspective, saving about 30% in premiums. You're getting a 15% reduction, and we're giving you 20% additional life fund. So it's additional base life fund. Okay. Clients obviously then, based on how they engage in Vitality Money, can keep those discounts and grow that Vitality Fund so that when the Vitality Fund period ends after year 3, they can actually get a further and larger Vitality Fund. Okay, so I think a very, very nice outcome for members. Okay, how the new process is going to work is that as part of Smart Advice, a client is going to be able to say that they would like to join Discovery Bank. Okay, so today, if you don't have a bank account or you are not on Discovery Card, you can't bank integrate. If you guys remember the old Discovery Card leads process, you were able to apply for a Discovery Card and we would give the client the discount on the policy. Effectively, we're allowing the same process again. So effectively, as part of the Smart Advice application for a life plan, you can apply, a client can apply for a Discovery Bank account. By doing that, they can bank integrate their policies and immediately qualify for a 15% premium discount. So while the process of the bank application is going through, they can still get the discount on their policy. Okay. When that application goes through, the client themselves would then be sent to the bank team. The bank team would prioritize the life members. They'll be putting them on a whitelist, and those members move straight to the top of the queue for being invited to Discovery Bank. Okay, so effectively, like I said, allowing all clients to bank integrate and effectively making it that a Discovery policy premium can be a further 15% more competitive. And like I said, this is going to be available from the Smart Advice release on the 8th of November. So I think another quite exciting change to the process. Okay. The final section I want to briefly touch base on today, guys, is just all the various support that goes around with this. I think you would have noticed we've really moved towards moving all our support to be digital. So if you look for the various offers, we have a huge amount of videos available about how they work. Okay, I think they're very nice for you as advisors, but I think they're also quite nice if a client ever wanted to know how an offer worked. It's quite a nice way just to play a 30-second video on how the max payback, double payback, or dollar life plan offers work. We've tried to move away from you having to individually sort through your clients to see who qualifies for our offers. That's why we do bulk quoting. We've already determined who qualifies. We've already done the servicing quote. All that would be on your side would be determining whether the opportunity is right for the client and activating the policy. So for this various quarter, the two opportunities we did bulk quoting for were buy-up cash conversion if the client has Carbon Financial Integrator, and the buy-up income continuation fund where the client has income continuation cover. So those two buy-up options are what we looked at. Okay. We've moved all our product support and really trying to move it all online. That's why we have the new online discovery, the DIT portal. And I think importantly as well, for the replacements process, we're really trying to digitize it and look at an online digital competitor tool. So this is the current stuff in the works. I'll briefly touch on those too. Okay. So just in terms of online material, as you should all know, we have the DIT portal really tries to make sure you can remain fully up to date with all the CPD and product training requirements. All of you should be familiar with DIT, I'm hoping, but I think really we're trying to make sure that it's easier for you guys to stay up to date with all the latest information. And in terms of digital information, I think a nice thing that we did recently was the claims website. Okay, I think importantly, what the claims website does to me is it allows clients to understand the importance of life insurance. Okay, it's not always a topic a client wants to talk about, but I think sometimes we think of statistics as things happening to other people. Okay, I'm not going to have a heart attack, but I know that males are at risk of heart attack, but it's not me, it's someone else. What the claims website allows members to do is it allows them to actually enter their details. I am a 26-year-old female professional with 2 children, whatever it is, and we give the claim statistics that are relevant to them. How many people who are 26 female with 2 children and professionals died last year? What were they dying of? What were they suffering severe illnesses of? Was it cancer? Was it heart and artery? Was it strokes? I think what it really does is it brings the insurance product to life for a member. It has all the various videos of client experiences on there. And I think importantly as well, it allows them to get an idea of how much cover that they need and how much value they can get from integration. So we try and show them how much they could save if they were engaging in Vitality. Okay. From an advisor perspective, what's quite nice is you can input a client's information and you can send them the link. So you just enter all their info, you copy the link, you send it to them. When they open it, they get the information that you put in. So once again, I think for some members, I think it really allows them to understand why are you bringing life insurance to them? Why should they care? Because in reality, things happen to people. It happens to all of our members. It's important to be protected. Okay. The final kind of technological change we're currently working on is simplifying the replacement policy process, trying to really take it away. I mean, I know it's a huge onerous burden on guys. I think really trying to simplify the process, but I think importantly as well, maintaining the relevance, maintaining the importance of advice. Okay, from our perspective, this isn't about just throwing the full competitor comparison on a page. This is about making sure we give information that is relevant to the particular client, because I think importantly, the outcome of the new replacement advice record was to make sure that clients were always going to be placed in a better position. Okay, from our perspective, that is still the focus. That's why we were kind of, like I said, really spending our time making sure we develop the correct tool, because you wanted to enhance your advice process, not replace it. Okay. From my side today, guys, that's a presentation. I hope really kind of short and sharp. I think covering what I believe were the most important topics impacting our business over the last year. But I think importantly, talking about opportunities available to you, highlighting the new health claims tracker and how you can now offer integration at zero premium, and how the new bank integrator process was going to work. Once again, guys, thank you very much for your time. It was very nice to see everybody. Thank you.